Good afternoon, everyone, and welcome to the Daily Volatility Box Report for October 16th, 2019. We are TOSindicators.com, home of the Volatility Box. For today's trading, once again, following our plan from yesterday, we had no trades that set up across the board. The only one entry that sort of maybe could have been counted if you were a more aggressive trader today was on the bonds, and that was along with the market open. For us, we were on the conservative box, so this was not an entry for us. We'll quickly go over it, but so in today's video then, we'll spend some time preparing for the earnings plays that we'll be setting up tomorrow morning, especially after we have some aftermarket earnings data, which we'll cover especially around Netflix, IBM, and CSX. For tomorrow, there's a few events that we're looking out for. The first is the crude oil inventories report. So for any new Volatility Box members, we talk about how we trade the crude oil inventories report in our trade plan. So just take a look at that. But that's how we'll be looking to trade crude. So once again, starting the 4 a.m. Pacific mark in crude, start to observe if we respect the aggressive volatility box or the conservative volatility box, and which is really encompassing price action a bit better. And then that's the volatility model that we'll use to play the actual report and the reactions after it. And just as a reminder, the last few crude oil reports, we've seen that the actual report has made a move, let's say like a candle like this, while the volatility boxes are substantially above and below. But it's really the subsequent hour in which we've made a reaction where we've been able to fade either side's range and then use that as an entry for the rest of the day, especially if it makes logical sense in terms of if we have greater supply than demand, and if we have greater supply than looking for an opportunity to get short, right? Something of that sort. But we've seen that really pan out with our crude oil reports, so just keep an eye out for that. We also have some more FOMC members speaking, but we had that today. No real volatility around either of those events. And then we have the budget balance. Again, not denoted with the red folder, so we'll go ahead and just continue using the aggressive volatility box and use our first hour test to determine if we should be using the conservative volatility box or the aggressive one. And again, just a reminder, the rule we added yesterday, and it's also in the trade plan, any news events that come out now, we just use the conservative volatility box. When in doubt, use a conservative box. All right, now let's move on to the actual earnings plays for tomorrow. Okay, so for today, we had UAL was the only earnings play that's set up. And what we were looking for was a gap and go either on the bullish or the bearish side. And if we had a bullish gap up, then we were looking for a move for about $2.01 from the open. And we also just made a note of some of the prices that we are around. So the nearest SD using the V-score, and this was all published on our website yesterday. UAL high today was 90.60, so we surpassed this nearest SD just by a little bit. And so you can see how by using this information, creating this game plan ahead of time, we had our first target that really you could construe alongside the average move, which helps you just plan out this entire trade. So UAL today opened at 89.35, which was a gap up. We were only 0.7% away from yesterday's high, so we ended up first filling that gap, and then we continued to make our move up higher. We did fall short of the average dollar move, but we did hit our first standard deviation price, which you could have used as a target. You could have used, whichever comes first, and then use that as a game plan to maybe then plan out your second target using the next closest standard deviation, anything of that sort. But at the bare minimum, you hit your first target, which would have been your nearest standard deviation on United Airlines. And so this play, while we still did fill our gap, did end up working out in terms of making a move after filling that gap in the direction that we were hoping for and giving us at least that first standard deviation. ASML did not gap up, and so this did not give us the condition that we were looking for since we had narrowed it down to bullish only. Now, we already have earnings that have come out in CSX, in IBM, and then also in Netflix. And so using the actual earnings information for CSX, and we created this game plan yesterday, we were looking for a gap and go only in the bullish direction, only if we have an earnings beat. And the actual result that we have is in fact an earnings beat, and so far price is up. And so tomorrow morning, one play that you might be looking at is getting in at the open and then looking for at least a move of either $1.85 or to the closest standard deviation, which is $70.61. And again, this is a rough estimate. You may want to double check this yourself, especially if you're in this trade using the V-score, which again, free indicator available for download. But so CSX is a play that is valid and one that is a setup for tomorrow. Now, moving on to the next play that's valid and a setup for tomorrow is IBM. So for IBM, according to our game plan, we were looking for a gap and go in the bearish direction. So far, IBM missed on earnings and is currently down on earnings, which then supports our bearish scenario in the gap and go, where we're then looking for a move of $2.66 or to our closest standard deviation, which is $132.25. And again, all this information is available on our website associated with today's blog post, which would be in the email that we sent out. Okay, and then the last play is in Netflix, where we were looking for either a gap and go in the bullish or bearish scenario. And so far, Netflix is up, and so given the conditions, at least that it looks like, Netflix not only beat its earnings, but is also up on those earnings, and so we'll be looking for a gap up, and then for Netflix to continue going in the bullish direction for either $4.43 or $321.17 using the closest standard deviation. And again, these are rough, and we're just using, for the most part, whole numbers, and so you may want to narrow it down based on, say, closest peaks or valleys, whatever methodology you choose to use. Once again, the earnings plays for tomorrow that are active and live, and as long as we gap above, or in the sake of open above, in the case of CSX and Netflix, today's high, and in the case of IBM, below today's low since it's bearish, then these plays will be active, and it might be plays that you're considering playing either using the actual stock or options on the stock. All right, and let's quickly go over that one potential trade in the bonds. And so today the retail sales numbers came out at 5:30 a.m. Pacific, and so that's right here. And if we draw an arrow just to see sort of the reaction that we had after, while we were drifting lower, we made the sharp move higher as the markets made a move lower. The aggressive volatility box did contain the price action from the retail sales numbers. However, according to our game plan yesterday, we had talked about how any signs that suggest the economy is slowing, which the retail sales numbers today were, I think, lower than previously before, something of that sort. There was a news headline around it. That was then our sign to be cautious and use the conservative volatility box. However, looking at just what price action told us and leaving our biases aside, what we saw was then the aggressive volatility box containing the price action around this news of the retail sales numbers. And that could have then been your premise, at least if you're an aggressive trader, to continue using the aggressive box. And you had an entry in the next hour right with the market open, where you had an opportunity to go long. And this gave you a really nice position for the rest of the day. If you see, that was almost the absolute dead low for the day in the bonds. And you had a really nice move up higher. And so that could have been a play if you were playing it using the aggressive volatility box, or maybe if for some reason you hadn't watched our video, or you didn't share the same bias in using the conservative box, then you had this nice entry in the bonds. But that was the only trade that set up today, not an entry for us. We were on the conservative volatility box, especially after the numbers came out. And using that, we did not get an entry on the bond. The takeaways from today's videos are really the earnings plays. So CSX is currently active, IBM is currently active, and then Netflix is currently active, at least based on where the stocks currently are as of recording this video. Again, double check the nearest SD, do your own homework, maybe find the price targets that you're a bit more comfortable with, and make sure that your risk rewards make sense to where playing these moves gives you, in my case, I prefer at least a 1-to-1. Whatever your ratio is, just make sure that the trades work out, and that way probabilities on your side, along with just thinking through the risk and reward. All right, take care, everyone. Good luck trading these earnings if you're trading any of them, and we'll see you in tomorrow's nightly update.